Good morning, Isaac. How are you?
Good morning. I'm doing well.
Good, good. We're gonna let these participants join us and get started.
All
I know
right.
we have lots to talk about.
Yes,
Uh,
we got a few things.
yeah, I know that the economy is on everyone's mind, so a very timely conversation. Um, in an effort to kind of get through all of this, I'd like to just go ahead and welcome everyone. Thank you for joining us with 10 Minutes with 52 Limited. My name is Elaine Shea. I'm the Community Engagement Manager at 52 Limited, which is a creative and tech staffing agency that has been locally owned and operated for almost 15 years. Amidst this pandemic, the economy is certainly on top of everyone's mind. Financial stability, the economic stimulus package was signed or is close to being signed. And so today we have Isaac Presley, President and CEO of Cordon Wealth, to talk about what that package looks like, what we should be doing with our finances, and how we should be moving forward. So, Isaac?
Yeah, well, thank you, Elaine, for having me. Happy to be here and share some of what recently has been announced and rolled out in terms of the economic stimulus package. So I'm going to go ahead and share my screen here. We got a few slides to walk through this. So it's a pretty big package, over $2 trillion. And we're going to hit the highlights, hit what it means to you as an individual, hit very quickly what it means to some small businesses, and then talk about some things that you can be doing, some actions you can take now. So first, just at a high level, $2 trillion is a lot of money. So just to put that in a little bit of perspective, a million seconds was earlier this month. A billion seconds was about 1989. A trillion seconds was 10,000 BC. So that kind of puts a trillion into perspective, and we're talking about a $2 trillion package here. So most of that money is going into one of three buckets. So either it's direct payment to households or to states or in the form of tax relief. It's loans that are going to be across the board, really. So this is corporations, large businesses. It's also small businesses. It's also loans to states, municipalities to kind of keep the economy and the services running. And then there's obviously some other funding, which is going to go to healthcare, which is the health crisis. So funding that is important. And then public transit as well had some funding there. So really just the highlights are, again, money to individuals. You probably heard already about some of the stimulus payments going out to individuals. There's some unemployment insurance relief there, some tax relief, and then some loans, as I mentioned. So let's dive into this. I'm going to focus primarily on the payments and the unemployment and the ramifications for you as an individual. And then we'll also talk about, at a very high level, some of the ramifications for small businesses. So let's just dive into this really quick. So the individual provisions are the stimulus payments, the direct payments, unemployment insurance, some changes to the retirement account, set up and rules and regulations, charitable giving, a little bit of changes there, education and student loans. This is a pretty big change for anybody that's paying on student loans or has their employer reimbursing education expenses or student loan payments. And then also some changes on the healthcare insurance. So stimulus payments, what do you need to know? This is kind of the headlines, right? So everybody in the US that files taxes is going to get either a $1,200 or a $2,400 check, depending on if you file taxes as a single person or as a married filing jointly. In addition to that, there's $500 for each child. So if you're married filing jointly, 2 kids, it's a $3,400 check, basically. It is subject, however, to some phase outs based on income. So what you need to know here is the threshold. So it starts phasing out. It's not completely phased out, but it starts phasing out if you're joint filer at $150,000 of adjusted gross income. That's a big term. Basically, it's the amount of money you're making, and it's going to show on page 1, line 7, I believe, of your 1040. So if you want to go back and look at the last time you filed, what your adjusted gross income is, look at the first page, look at line 7, and that's the number. Starts to phase out at 150K. For a joint filer, 112.5K if you're head of household, and if you're single, 75K. A couple things to note. So these phase outs, basically it gets phased out $100 of the benefit, or $100 of your income over that amount. The benefit gets reduced by $5. So just kind of think about say you make $200,000 as a household, you're $50,000 over the threshold. Basically, just divide that by 20. 100 divided by 5, and that's how much your payment gets reduced. So in that scenario, your payment would get reduced by $2,500. If you have no kids, basically you get no stimulus check in that example, because it's a $2,400 check minus $2,500, you're left with nothing. If you had 2 kids in that scenario, your total benefit or payment would be $3,400 reduced by the $2,500. So that's kind of how it works. The only other thing to know here is that it's going to be based on the last tax return you filed. So if you've already filed 2019, it's going to be based on that. If you haven't filed 2019 and the last one you filed was 2018, it's going to be based on that. The nuance there is that this is technically an advanced payment on your 2020 taxes. So if you had a high income year in 2018 or 2019, but then your income's reduced in 2020, technically you're not going to get a check now, but technically that's going to be a credit on your 2020 taxes. So something to kind of keep in mind. Only other thing there is it's going to be direct deposit based on whatever direct deposit account you had set up on the last time you filed your taxes. So just know that. If you've changed bank accounts, if that's no longer open, it's kind of a bad scenario. Imagine calling the IRS and trying to get that changed. Like, I don't know, there's probably going to be some people that get impacted there, and their payments are going to be delayed. So, but at a high level, that's what we're looking at for the individual payments. Unemployment insurance. So basically what they've done is extended the duration of payments from 26 weeks to 39. They've done a 4-month increase on the amount. So every state kind of does their own unemployment insurance program. Basically, this is $600 on top of whatever the state was going to give you. And then pretty important right now, gig workers and freelancers are included in this unemployment insurance, which they were excluded previously. So if you fall into this kind of the gig worker freelancer, but make sure if you're unemployed right now to look into this program and file your unemployment claims. Okay, so on the retirement account side, so what are the implications? So first one, if you're taking money out of your retirement account in an RMD, this is required minimum distribution. If you're of retirement age, basically the government makes you take money out of these accounts so that they can pay or get taxes on it. Those RMDs are waived, meaning you don't have to take them this year, which obviously is going to reduce your taxes. Additionally, some sort of hardship scenarios. If you have to pull money out of a retirement account right now to fund life, essentially, if you're out of work, they're allowing you to do that as long as you're experiencing adverse financial consequences, which I would argue probably pretty much applies to anybody right now that's needing to pull money out of these accounts. You can do that without penalty. So previously there was a 10% penalty for pulling that money out before you're of retirement age. And then importantly, taxes can be spread out over 3 years. So you don't have to pay taxes on that money today. However, it may be to your advantage if you're in a low income year to pay the taxes today versus over the 3 years, but you have the option of spreading it out. And then on the 401k side, they've increased the limit. You can take a $100,000 loan from a 401k versus $50,000 previously, and you can actually delay those payments for a year. So again, kind of last case scenario to pull money out of a retirement account, but if you have to do it, there's some relief there for getting the money out and using it for living, basically. All right, so quickly on the rest of the individual pieces of this legislation. So on the education front, so this is kind of a big deal. If you're making student loan payments right now, any federal student loan payment is suspended through the end of September. So you get some relief there. So, if you need the cash flow now, don't pay your student loans. Basically, that's an interest-free suspension, and it kind of gets tacked on to the end. It's basically how that works. Another change is employers, if they're going to pay off student loans, there's some programs like that, or if they're going to pay for tuition, that's typically taxable. Part of this program is that up to $5,250, that's actually a tax-free benefit now. So there's kind of an opportunity here if you fall into the camp where you have some student loan debt. I mean, potentially if your employer is flexible, you could go to them and say, hey, instead of paying, I'll reduce my salary by $5,250 and put that money towards my student loan to pay it off. That's both tax-free to you versus getting paid, being taxed on it before. And from an employer perspective, they're going to avoid the payroll taxes on that. So it's 6.5% that they have to pay in for your portion of Social Security and Medicare. So it's kind of a win-win if you can be flexible and do something like that with your employer. Um, on the charitable side, they've basically put back in $300 of charitable giving deduction, which is above the line. So previously, you had to itemize deductions to get a charitable deduction. And now with the standard deduction being higher than it was previously, not a lot of people do that. So they put back in $300 you can give to charity and actually deduct it now. And that's a permanent change. This is not a temporary change, it's a permanent change. And then lastly, on the healthcare side, just know that any COVID-19 testing now must be by mandate covered by insurance. So if you're getting tested, just know that. All right, so there's a lot there on the individual front. On the employer front, really three main things here: some tax relief, some credits to keep people employed, and some loans to keep people employed through this. So really what the idea is to help small businesses from a cash flow perspective bridge this gap while revenue may be down. So on the tax front, if you're an employer, basically know you can delay paying this Social Security and Medicare tax, which is 6.5% of payroll. Or 6.2%. There's some changes to recouping some losses, and then you can increase the amount you're deducting business or loan interest. You can increase the deduction there. Probably the bigger two are the retention credit and the protection loans. So on the retention credit, basically if your revenue is less than 50% drop, you can get a credit for this 6.2% tax. So basically reduce your tax by the amount that you're paying for Social Security and Medicare. And then the other one is paycheck protection loans. So this is going to be administered by the Small Business Administration. Basically, the idea is loans to cover payroll, rent, utilities. And the incentive is if you don't reduce wages or employees during this period for 8 weeks of payroll, rent, utilities, that loan is potentially forgivable. So it's basically money to cover payroll, rent, utilities. So if you're a small business, definitely something to look into. All right, so just to wrap up, basically one quick concept here of, is your income stream more like a stock or more like a bond? So a stock is going to be more volatile. So, you know, your income could be higher, but it could also get hit. So think about, you know, an entrepreneur, the boss on the left here, versus a bond, your income's going to be more stable. So think like a teacher, somebody that works in the medical field right now, a tenured professor would be the classic example. So kind of know which category you fit into, and then that should dictate kind of what you do in this circumstance. So what are you going to do if you get this stimulus payment, if you delay some taxes, there's money coming in the door, what do you do with it? So there's kind of three different scenarios here. So one is the person that maybe they're, you know, have lost their income, they're already laid off. Use the money basically first and foremost to cover the necessities. So your rent, your utilities, your food. Also, if you're here and you have student loans, defer those payments. There's no reason to pay those right now. And then other debt, there's an opportunity to potentially defer or renegotiate that debt as well. Basically, cash is king right now, and what can you do to defer any outgoing cash to cover the necessities? So that's kind of the first scenario. Second scenario is maybe you have reduced income, or you think you might have reduced income here in the next couple months. What do you do there with the check that you're going to receive? So one would be, if you don't have an emergency fund, build it. And if you do have that emergency fund, maybe use the opportunity to pay down debt to increase your cash flow going forward. And then the last scenario here is you don't expect a loss of income. So maybe your position, okay. What do you do? So again, you could cushion the emergency fund. So maybe you have one, but you need to increase that. What they want you to do is basically use that money to stimulate the economy, you know, go out and spend it. However, as a person that delivers financial advice for the individual, maybe that's not the best thing as an individual. It might be the best thing for the economy in general, but maybe not for an individual. So what else could you do? You could actually accelerate saving or investing. So kind of get more money into your 401k or retirement plan now while the market's low. You could be charitable. I mean, if you don't need it, somebody else probably does. And so look for ways to use that money to share it with somebody else that needs it. And then lastly, you know, just get creative, start a business. There's a lot of businesses that are probably going to get created online, you know, virtual yoga and things like that I've seen pop up. So get creative, maybe use that money to start a new business. That would be an idea there if you don't need it to fund the necessities today. So that's kind of it. If we have time, I know that we're going to do some Q&A, but I wanted to leave with a couple resources for you. So the first one you just go to our website, cordenwealth.com/financial action checklist. Basically, those things that we just covered are in a one pager if you want to kind of go through those and figure out the actions you can take. And then we've also created a page on our website, which is just /coronavirus that kind of gives, we've written some things, we've done a podcast, we're doing webinars like this just to try to educate people on what's going on. So if you're curious in that, you can check out that page as well. So that's it for me.
Isaac, thank you so much. That was a lot to cover and really great information. So thank you so much. I'm really impressed with how much you were able to cover in that 10 minutes. We do have a question from Denise about the independent contractor and their ability to apply for unemployment. And you said that this time, those who are freelancers or who are kind of, who have gigs, they are eligible for unemployment. Is that correct?
Right. They're explicitly called out as eligible. So yeah. So if that's you, if you are a gig worker, a freelancer, et cetera, and you are unemployed, or you've had reduced income based on this, definitely inquire about some unemployment insurance right now.
And what about mortgages? Are those kind of like by case basis, or is there going to be any kind of wide decision about whether mortgages for homeowners will be deferred or delayed?
Yeah. So I know that that's been on the table. You saw a country like Italy do that, where they essentially suspended mortgage payments for, I don't know, a period of months. That did not go into the package as far as I've seen. And so there, I think it is more on a case by case basis. I know that there is some policy around if your loan is through basically guaranteed by any of the federal agencies, if it's an FHA loan, they've suspended any evictions now. So if you don't pay, you're not going to get evicted. I think there's some language in there about you're not going to be turning off utilities and things like that if you're not making your payments. But it's not like the student loans where the interest waived and they basically just tack the payments on the end. I mean, I think if you miss payments, it's going to be recouped, and you're going to have to recoup those. But I don't think there's any evictions or anything like that on the table if worse comes to worse.
Denise shared that she was able to negotiate with Wells Fargo to defer her mortgage without
perfect.
Suppression.
Yeah.
Great.
Yeah. So I think that's the key there is, work with your lender to find out what you can do. And then we didn't cover this, but there's a lot of support both from the Federal Reserve and corporation support that money is going to these banks so that if they're not getting payments from the borrowers, that the banks can still either continue to be solvent, one, and also continue to extend loans into the economy as needed. So they're kind of getting some relief, and they're probably willing to pass that on to their borrowers as well.
Awesome. Lots of good stuff. I'm hoping to invite you back as the economy shifts and changes and new things occur. But in the meantime, please take care of yourself. Thank you for all of the great advice, and thanks for everyone for joining us for another 10 Minutes with 52 Limited. Have a great weekend.
Thanks for having me. Bye.
Thanks.